Hi, welcome everyone. I'm Josh Becker, State Senator for the 13th Senate District, representing most of San Mateo County and northern Santa Clara County. And thanks for joining us for this town hall on taxes today. We got a lot of response, so there's a lot of interest and a lot of questions that hopefully will get answered today by our expert panelists. And we'll introduce our expert panelists, and let me just mention them all very quickly. Keith Kirschner, Senior Stakeholder Liaison for the IRS. Brenda Vogt, Taxpayer Advocate from the Franchise Tax Board. Sophia Salacé, Program Manager, Free Tax Help, United Way, Bay Area. Again, many people wrote in questions, and we'll get to many of those today. And we will also provide resources if your question was not answered, is maybe very specific, in which case we'll hopefully direct you to the right resources to get your question answered. So thanks again for participating, and hope that you find this informative and helpful today. So our first panelist, I mentioned, is Keith Kirschner, the Senior Stakeholder Liaison with the Communications and Liaison Division of the IRS. He's Relationship Manager for small business and tax practitioner organizations. He works with industry and trade associations, tax professionals, and other federal, state, and local government agencies to deliver IRS key messages. He's been working in taxpayer education for the past 20 years and brings a breadth of experience and knowledge to us today. He's not on video, but he is, will be speaking to us here today. Welcome, Keith. Thank you very much.
Well, thank you, Senator. I appreciate the invitation. And hello, everyone. Again, I'm Keith Kirschner. I was just introduced. I'm with the Internal Revenue Service. And does anybody have my PowerPoint up right now?
Yes, we do.
Okay, great. So welcome to filing your 2021 tax return. This year, there are more reasons than ever to file your tax return as soon as you can, with many new and expanded tax benefits for many, even those who don't normally file a tax return. In this presentation, we'll look at a number of refundable tax credits. Each of these credits has important changes that you may not have heard about. Then we'll look at a pandemic-related deduction for those of you who don't itemize deductions, but give cash or credit card donations to qualified charities. And finally, we'll look at a number of filing tips to make this tax filing go as smoothly as possible for you and for the IRS. Next slide. Tax year 2021, there are several child-related tax credits that you may be eligible for. These credits include the child tax credit, the earned income tax credit, and the child and dependent care credit. These credits may be refundable to you, which means that you might receive a refund even if you are not required to file a tax return. Additionally, there are tax credits, deductions, and savings plans that can help taxpayers with their expenses for higher education. Another refundable credit that we will discuss is the recovery rebate credit, which is related to the economic impact payments that you may have received during 2021. Next slide. The American Rescue Plan Act, signed into law in March 2021, made significant changes to the child tax credit. These changes impact both the 2021 calendar year and the 2021 tax returns. The new enhanced child tax credit provisions for 2021 are, it raises the minimum age, it raises the maximum age for a qualifying child from age 16 to 17. It also increases the child tax credit from $2,000 to $3,000 for children over 5 and under 18, and to $3,600 for children under 6. And for taxpayers whose main home is in the United States for more than half of 2021, the plan eliminates the maximum refund limit of $1,400 on the additional child tax credit. It also eliminates the requirement that the taxpayer have a minimum of $2,500 in earned income for the tax year. This means that even families with zero income can get the full child tax credit this year. An important provision of the American Rescue Plan is that it provides for advanced payments of the child tax credit of up to 50% of the estimated 2021 credit for taxpayers whose main home is in the United States for more than half of 2021. Next slide. The enhanced child tax credit for 2021, you may receive up to $3,600 for each child age 5 and under, $3,000 for each child age 6 through 17 at the end of 2021. No income is required to claim this credit for 2021. Qualifying child must have a Social Security number. Qualifying child must be claimed as a dependent on your tax return. The qualifying child must live with the taxpayer for more than half the year. There are exceptions for temporary absences. Qualifying child includes foster children or extended family. Dependents who can't be claimed for the child tax credit may qualify you for the credit for other dependents, which is up to $500 per dependent. The enhanced child tax credit is phased out when modified adjusted gross income is more than certain levels based on filing status. Low and no income taxpayers generally will not be affected by this phase out. Next slide. The American Rescue Plan Act provided for advanced payments of the child tax credit of up to 50% of the estimated 2021 credit. Advanced payments were made to individuals whose main homes were in the 50 states or the District of Columbia for more than half the year. Advanced payments were estimated from the information included on eligible taxpayers' 2020 tax returns or their 2019 returns if the 2020 returns were not filed and processed yet. The amount of the IRS determined depended on each individual person's household factors, such as adjusted gross income, the number and age of qualifying children, filing status, etc. The payments were made monthly beginning July 15th through December 15th and deposited directly to a financial account on file with the IRS or sent to the address of record if we didn't have a financial account on file for the taxpayer. The total of the advanced payments were up to 50% of the estimated child tax credit for 2021. Generally, the amount were up to $250 per month for each child age 6 to 17 and up to $300 per month for each child under age 6. Next slide. If you received advanced payments when you file your 2021 tax return, you will need to compare the advanced child tax credit payments that you received during 2021 with the amount of the child tax credit that you could properly claim on your 2021 tax return. The fastest way for you to get your tax refund that will include your child tax credit is by filing electronically and choosing direct deposit. If you receive less than the amount that you were eligible for, you'll claim a credit for the remaining amount of child tax credit on your 2021 tax return. If you receive more than the amount that you're eligible for, you may need to repay some or all of that excess payment when you file. In January 2022, the IRS sent you letter 6419 to provide the total amount of advanced child tax credit payments that you received in 2021. You need to keep this and any other IRS letters you received about advanced child tax credit payments you received with your tax records and refer to them when you file. Next slide. The 2021 recovery rebate credit is for those who did not receive the full amount of the third economic impact payment for which they are eligible. Don't recall the amount of the third payment? Third economic impact payment was up to $1,400 for an eligible individual with a valid Social Security number, or $2,800 for married couples filing a joint return if both spouses have a valid Social Security number, or if one spouse has a valid Social Security number and one spouse was an active member of the U.S. Armed Forces at any time during the taxable year. $1,400 for each qualifying dependent with a valid Social Security number or adoption taxpayer identification number issued by the IRS. Individuals who didn't qualify for third economic impact payments or did not receive the full amount may be eligible based on their 2021 tax situation. If you're eligible for the credit, you'll need to file a 2021 tax return to claim any remaining amount of the third economic impact payment that you did not receive. If you receive the full amount of the third economic impact payment, you won't include any information about it when you file your 2021 tax return. The IRS will send you letter 6475 to provide the total amount of the third economic impact payment that you received. You need to keep this and any other IRS letters you receive about your stimulus payments with your tax records and refer to them when you file. We also recommend everyone create an online account to securely access your information, such as the amounts of the economic impact payments. And I'll refer to that on a future slide. Next slide, please. For 2021 only, more childless workers and couples can qualify for the Earned Income Tax Credit, a fully refundable tax benefit that helps many low and moderate income workers and working families. That's because the maximum credit is nearly tripled for these taxpayers and is for the first time made available to both younger workers and senior citizens ages 65 and above. In 2021, the maximum Earned Income Tax Credit for those with no qualifying children is $1,502, up from $538 in 2020. Available to filers with an AGI or adjusted gross income below $21,430 or $27,380 if married filing jointly. In 2021, it can be claimed by eligible workers who are at least 19 years of age. Certain full-time students under age 24 don't qualify. In the past, the Earned Income Tax Credit for those with no qualified children was only available to people ages 25 to 64. Another change applies to taxpayers with and without qualified children. For 2021, it allows them to choose to figure the Earned Income Tax Credit using their 2019 earned income, as long as it was higher than their 2021 earned income. Some instances, this option will give them a larger credit. Changes expanding for Earned Income Tax Credit for 2021 and future years include singles and married couples who have valid Social Security numbers can claim the credit even if their children don't have Social Security numbers. In this instance, they would get the smaller credit available to childless workers. In the past, these filers didn't qualify for the credit. More workers and working families who also have investment income can get the credit. Starting in 2021, the limit on investment income, for example, dividends or rental income, is increased to $10,000. After 2021, the $10,000 limit is indexed for inflation. The previous limit was $3,650. Married but separated spouses who do not file a joint return may qualify to be treated as not married for Earned Income Tax Credit purposes if they meet certain other requirements. Next slide. You may be able to claim the credit. This is the Child Independent Care Credit. You may be able to claim the credit if you pay someone to care for your dependent who is under age 13, or for your spouse or dependent who isn't able to take care of himself or herself. The credit can be up to 50% of your employment-related expenses. To qualify, you must pay these expenses so you and your spouse, if filing jointly, can work or look for work. For 2021, you may claim the credit on qualifying employment-related expenses of up to $8,000, which was previously $3,000, if you had one qualifying person, or $16,000, previously $6,000, if you had two or more qualifying persons. The maximum credit in 2021 increases to 50% of your employment-related expenses. The credit is refundable if the taxpayer or taxpayer's spouse, if married filing jointly, had their main home in the United States for more than half the year. For 2021, the maximum amount allowed to be excluded from an employee's income through a dependent care assistance program provided by an employer is increased to $10,500, which was previously $5,000. Next slide, please. Okay, charitable contributions. I mentioned this in the first couple of slides. This deduction allows many more taxpayers to receive a deduction for charitable contributions. It is estimated that 9 out of 10 taxpayers normally cannot take a deduction for charitable giving, but this temporary law, which is designed to encourage giving during the pandemic, will give many more that option. Cash contributions include those made by check, credit card, or debit card, as well as amounts incurred by an individual for unreimbursed out-of-pocket expenses in connection with their volunteer services to a qualifying charitable organization. The IRS reminds taxpayers that to receive a deduction, they must donate to a qualified charity. Next slide. Okay, steps you should take right now. Organized tax records make preparing a complete and accurate tax return easier. It helps avoid errors that lead to processing and refund delays. Individuals should have all their tax information available before filing to ensure the return is complete and accurate. They should notify the IRS if their address changes and notify the Social Security Administration of any legal name change. Remember, most income is taxable. Record keeping for individuals includes Forms W-2 from employers, Forms 1099 from banks, issuing agencies, and other payers of amounts that include unemployment compensation, interest, dividends, distributions from a pension, annuity, or retirement plan. Form 1099-K and 1099 miscellaneous and 1099 NEC or other income statement for workers in the gig economy. Other income documents and records of virtual currency transaction. Taxpayers should also keep end-of-year documents, including letter 6419, which I mentioned, about the advanced child tax credit payments. Letter 6475, that's your 2021 economic impact payment, to determine eligibility for the recovery rebate credit. And Form 1095A, health insurance marketplace statement to reconcile advance payments of the premium tax credits. The IRS online account securely provides tax information on irs.gov, and I'll mention that coming up here shortly. There are many tips for filing season using electronic filing options. Many options are available. You can see that we have IRS free file or fillable forms, free tax return preparation site, and I think Sophia is going to talk about that in her presentation. Use commercial software or find an authorized e-file provider. If you don't have a bank account, get one. Many free accounts are available. And also on irs.gov, we have Where's My Refund? And you can check and see the status of your refund on that site. Okay, next slide. Here's that online account I was mentioning. You can use online account to securely access the latest information available about your federal tax account and see information from your most recently filed tax return on irs.gov. Taxpayers who access online account can securely gain entry to the Child Tax Credit Update portal to see their payments, payment dates, and accounts. Eligible individuals claiming a 2021 recovery rebate credit can log into their online account to see their economic impact payment amounts so they can accurately claim the credit when they file. Taxpayers who have an online account may view the amounts of their economic impact payments, access Child Tax Credit User Update portal for any info on their advanced child tax credit payments, view key data from your most recent tax return, and access additional records and transcripts. You can view details of your payment plan if you have one, and you can view up to 5 years of payment history and any pending or scheduled payments. Next slide. How long will it take to get your refund? Well, many different factors can affect the timing of your refund after we receive your return. Although the IRS issues most refunds in less than 21 days, the IRS cautions taxpayers not to rely on receiving a refund by a certain date, especially when making major purchases or paying bills. Some returns may require additional review and may take longer. For example, the IRS, along with its partners in the tax industry, continue to strengthen security reviews to help protect against identity theft and refund fraud. Additionally, refunds for people claiming the Earned Income Tax Credit or additional child tax credit cannot be issued before mid-February by law. Some returns filed electronically or on paper may need manual review, delaying the processing if our systems detect a possible error, the return is missing information, or there is a suspected identity theft or fraud. Some of these situations require us to correspond with the taxpayers, but some do not. Okay, and my last slide is on additional resources. So here are some documents that you find on irs.gov, and that's our website we encourage you to visit. And you can see Form 1040, instructions for the 1040, and there's some publications. There's one on how to create that IRS online account. And the last publication there is very useful, IRS Services Guide. It shows you where to find help on irs.gov. And I think with that, my presentation's over. Thank you for listening.
Great, thank you very much. We have some questions. We'll try to get through a few of them here. Number one, Sheila asked, hearing conflicting advice on how long to keep your returns. Is it 3 years, 7 years, 10 years? What would your answer be?
Well, we have, those are called statute of limitations. That's what determines how long you keep your tax records. And the general rule is 3 years. The general rule is 3 years for any tax returns you file. And that's because the statute of limitations for 3 years, we can go back 3 years to make any assessments on any of those tax returns, which means finding a liability. And by the same token, you only have 3 years to claim a refund. So if you found an error and the tax return 4 years ago, and you see that you should have got a refund, you're out of luck. You only have 3 years. Now, the other general statute is collection statute. Collection, it's in collection, which means you owe money. We have 10 years. That's a 10-year statute of limitations. And we have 10 years to collect on that. Also, if there's any fraud found, there's no statute of limitations. If we can prove that there was fraud involved, we can go back 20 or 30 years if we want to.
So just try to appreciate that answer, just trying to net that out. So you're saying 3 years is generally fine.
Yeah, 3 years is the general for any filed tax return. And then 10 years for any collection, if it's in collection status, which means we've already assessed an amount due, but it has not been paid, it goes into collection. And you'll be contacted by a revenue officer and you'll receive correspondence, but we have 10 years to collect that.
But for most people, in terms of shredding their records, whatever, 3 years is okay. Is that correct?
Yeah, after 3 years, you can go ahead. You don't need to keep it. There's no reason for IRS purposes that you would need to keep that. Now, you may want to keep that longer. Sometimes for bank loans and things like that, they may want to go back further than that. But we only require 3 years.
Senator, can I add to that?
Sure.
The state of California actually has a 4-year statute of limitations. So it may be beneficial to hold on to the documents for at least 4 years because the state of California does have the ability to do an audit through that 4-year period. So, and claim it for a refund.
Good to know. I did not know that. So that's good to know. We assume this question, Victor, I did not receive, you addressed this a little bit, I just want to make sure I'm clear. He said, I did not receive the full amount of the $1,400 third COVID rebate check sent by the government in 2022. I received only $600. Now, how do I claim the balance as a credit on my current tax return as advised by the IRS letter?
Well, I covered that in my presentation. It's called the rebate recovery credit. And you actually claim that on your 2021 tax return. So you'll have to know how much, because you didn't receive the full amount, you can claim the balance of that through that rebate recovery credit.
Got it. So you just, okay. Yeah, I know you addressed that, but so you claim it as a recovery credit, the balance on just regularly on your form?
Yeah, on the tax return itself. And there's a place on the form where you list that amount and to claim that credit, and you'll get that as a part of your refund.
Right. Excellent. Excellent. And Louise said, since the PUA 1099 was for 2 years instead of one for each year, does that push tax liability higher in 1 year? I'm not sure what that means. Does that mean anything to you?
Yeah, I don't know what PUA means either. I have not seen that. So I really can't answer that question.
Right. We'll skip that one for now. You mentioned the where is my refund? Because Rosalind asked how can a taxpayer successfully contact the IRS about a refund that was filed 9 months ago, from a return that was filed 9 months ago for 2021. Telephone systems lead to holds, et cetera, et cetera. The website said return was in process. Then in January 22, no information whatsoever. So it sounds like she was getting, hey, it's in process, and then it kind of went blank.
Yeah, that question is a little, I have a question about that because she said she filed a 2021 tax return 9 months ago. Well, you couldn't start filing that until January. So I think maybe she means a 2020 tax return that was filed 9 months ago. But here, I'll answer that question because right now, because of the pandemic and our staffing is very low, we still have many 2020 returns that haven't even been processed yet. So none of the refunds have gone out. I think somewhere in the neighborhood of 2 million returns we're still trying to process because we had such a big backlog. So that's probably why she's not getting her refund. And all I can say is you'll need to be patient. It's just this particular year and actually last year also because of the pandemic. So really calling the telephone, even if you get through, they're just going to give you the same answer I did. The chances are the return has not been processed. So we're working back through that. At one point, we had 4 million that were in backlog status, and that was just a few months ago. So we are making progress in getting those out.
Okay. Thank you. I mean, I guess along those lines, John said it's very difficult to report an IRS error. Finally succeeded. Then after IRS acknowledged error, it's been very difficult to get corrected. So again, what's the best way to work with the IRS when there's been an error? Number of things along those lines, just people having difficulty getting in touch. Do you have any advice for them?
Yes, I do. So if you've been trying to get through our systems and you've done what you had to do, you've notified the IRS, and you're still not getting any resolution to the problem, this is where I recommend that you contact our taxpayer advocate service. I know Brenda's a taxpayer advocate for Franchise Tax Board, but we have many taxpayer advocates, local taxpayer advocates throughout the country, and simply go to irs.gov, and all you have to type in is TAS, or you can type in taxpayer advocate. They will give you a listing, a nationwide listing, and you can look in California and you can find a taxpayer advocate. There are several, I think there were probably a dozen in California. But look up your local taxpayer advocate, and they will guide you through. That's what their job is. If for some reason you're not getting satisfaction through normal IRS procedures, that's when you contact the taxpayer advocate. And their usual guideline is if you've tried for over 30 days, get a resolution, then they want you to contact them. And they kind of cut through the red tape.
That is very helpful. That's probably, maybe that might be the most helpful thing that comes out of this here today. So I appreciate that. Did not know about that. So that's great. Hopefully that helps Hak Ming and some other folks who have written in. We can move on. Other people with specific questions, please, again, we'll help hopefully direct you to where you can hopefully get those answered. There was a question about the SALT, the state and local tax deduction, will it ever be restored? And I think the question is, I mean, that was contemplated as part of Build Back Better, but now is stalled. Is that correct, Keith?
Yes, and that of course is a matter for Congress. That's a tax law change. So the IRS has no control over that. We can make recommendations to Congress, but it's up to Congress to actually pass the law that restores that.
Yeah, okay. Great, thank you, Keith. Please stay on. We're gonna have a little more general discussion at the end. We're gonna continue with our panelists to give us some overviews and some things to think about as we're preparing our filings. And then again, we're gonna continue to engage in specific questions with each one and then bring everyone together at the end. So Brenda Vogt will be next. As we mentioned, our taxpayer advocate at our Franchise Tax Board here. And prior to that, she worked as program manager for Partnerships LLC and Estates and Trust workload, and she works as a technical assistant to the taxpayer's advocate for 5 years. So welcome, Brenda.
It's delightful to be here. Let me see if I can share my screen and get a PowerPoint going for you.
Thank you.
From the beginning. And I got some really bright colors, so let's see.
It's good.
Is everybody able to see that okay?
Yeah.
Okay, so that's just our logo, and that's the least bright of them all. And here we go with that. But Senator Becker, thank you so much for allowing us me to be here today and to help offer some guidance for the state of California and some of the assistance that we can offer to your constituents. So here's some pre-filing information. People want to know, when do they need to file their California tax return? There's a magic number of about $6,000. I just throw that out there because when you're about that level, that's when you want to look and see what filing status am I? Am I single, married filing joint, registered domestic partner, married filing separate? Any of those classifications can offer a different income level that would give you a filing requirement. So if you're required to file a federal return, you're going to be normally going to qualify to file a California return. If you receive income from California, even if you're not living in California, it's not your primary state of residence, you may have a filing requirement with the state of California for services offered here. And as I said, if you have income at a certain threshold. But most importantly, as Keith was saying, we offer also a earned income tax credit, and you may not have to have any income to receive that refundable California earned income tax credit. So you want to make sure that you check with that. Our amazing website, ftb.ca.gov, has so much information on there. If you search for, do I need to file, you'll get even more detailed information about California filing requirements. So we have a return due date of April 18th this year. Usually it's April 15th, but we're following federal. There is a federal holiday and we would just want to make it easy. So your return is due April 18th. But most importantly is if you owe any taxes, it needs to be paid by April 18th. If you don't make a payment by that date, there could be penalties and interest that could compound on that, and we don't want that to happen. For California purposes, if you can't make the 4/18 date for filing your return, you still have to make the payment, but you can file all the return and all the supporting documents by October 15th of 2022. Automatic, don't need to do anything about that. So last year we had extensions for COVID. This year we do not. So April 18th is the target date for your payments, and also for the returns unless you would like to take an extension. This is for individual taxpayers. There's different filing due dates for business entities that you can find on our website. So we have some free options to be able to file your state income tax return. Our first one is CalFile, and there's some menu-driven questions that you'll be asked for this. And it's free to you, it's online, you can populate it if you qualify for it, and your California return will be filed for free directly to the Franchise Tax Board. If you would like to have some assistance and talk with someone about filing your return, we do have the Voluntary Income Tax Assistance Program. We have a great speaker coming up about that who'll be able to offer more. But I did want to let you know that if you do go to our amazing website, that you can search for a local VITA program or a tax counseling for elderly, TEC program in your area. By zip code. So that is available on our website. And they will help you, if you qualify, to file your federal and state income tax returns for free. So I want to make sure that everyone knows that if you qualify for the Earned Income Tax Credit, you need to file a return. So please file a return. It's your money. We want to get it back into your pocket. And the way to do that is file a return. It's available to individuals who normally may not have a filing requirement. And it's now available for taxpayers who have a taxpayer identification number. It used to be only limited to those with Social Security numbers. The maximum credit is $3,027. And if you have a child who qualifies as your dependent and is under age 6, you may also qualify for the youth tax credit, which is $1,000 for each child that qualifies. So this is some general information for you, and I want to make sure that if you're entitled to this, that you do file your return and you do get the money. California healthcare mandate. California Franchise Tax Board has the responsibility of imposing a penalty when someone is not properly covered by healthcare. We want everyone properly covered by healthcare. So the best way to do that is go to Covered California .ca.gov and see if you qualify for help in getting qualified health care. If you don't choose to do that and you don't have qualifying health insurance, you may be able to obtain an exemption from coverage. There's some exclusions that are available. You'll need to look into those further. But if you don't, you'll have to pay a penalty. And we don't want anyone to pay that penalty. You will receive a FTB 3853 healthcare exemption and penalty calculator form if you would like to on our website. You can request that. We also have a healthcare computation available on our website, so you can get that. But the most important thing is to get the healthcare, and then when you do file your return, please check box 92 on the return. That communicates to us that you indeed have healthcare coverage and the penalty is not applicable. If we don't see that the box is checked, we may automatically send out a billing notice with the penalty on it. And then that involves another conversation. So please make sure that the box 92 is checked. Communicating with the Franchise Tax Board, the best way to contact us is to use our normal channels of communication first. And the reason I say that is because there are technicians and subject matter experts at the end of that phone line that are familiar with the area that you'll be calling about and able to get you the quickest answer and the quickest reply. And they're also able to quickly escalate it to someone who is able to get that answer. So our customer service line, toll-free 800-852-5711. I must warn you that this has been a very hard line to get through lately because we have been issuing out the Golden State stimulus payments, and a lot of people have been calling because they want to know more about that. If you have received an assessment and you are in the collection situation where you need to pay the state of California, here are some contact numbers for you to get directly into the collection centers and get the information you need. For individuals, it's 800-689-4776. And finally, there's an FTB directory. If there's an area that you don't see through my presentation, you can go to ftb.ca.gov and in the search box, type in FTB directory, and it will give you a detailed list of direct numbers for specific areas. So as I said, we do have wait times that have been more significant than we've experienced in past years, but we do have for you a dashboard that shows how long you would be waiting to talk with someone with the Franchise Tax Board. It's on our homepage. It's that down in the lower left-hand corner. You click on wait times, and this is what it'll bring up. So it'll show you that if you use the customer service line, when I printed this out, it was a 2-hour and 28-minute wait. So there's different lines. If you use the general chat, it was just a 1-minute wait. So there's a way for you to be able to make decisions about what the best way to communicate and the quickest way may be for you. The best way to get information that we have about your account situation is through a MyFTB account. And a MyFTB account is an account that basically shows information that we have on file. So you can see images of your last returns. You can see if you are still needing to make payments. You can see if there were any correspondence that were sent out. You can see payment history. One of the ones that can offer some really good help is to see how much the wage and withholding information was. This really helps in completing a tax return if you don't know exactly how much that was. Oftentimes, someone will populate a wage or withholding amount that's different from the amount that we received from those entities that actually did the withholding. and then we have to hold the return and we have to manually process it to see what's going on. But if you can look into your MyFTB account, you can validate that the amount that we have is the amount that you show. And then if it's not, then we can have conversations beforehand without holding up your return. Getting a MyFTB account is so easy now. You can go to ftb.ca.gov, click on the MyFTB account. There's the logo right there on the slide, and log into it or create a MyFTB account. We've just partnered with a third-party vendor, and we've made it even easier for you to get your MyFTB account, because you can go in, populate some information, and then we can validate it with this third-party vendor and give you access to your MyFTB account in real time. If you want to take that option, you still can say, I would rather get a PIN number sent to me in the mail, and you can still have that option. So this is available for personal income tax taxpayers, individuals, and I would encourage you, if you haven't done so already, you can do this. You can also, if you're working with a tax practitioner, you can give your tax practitioner authorization to access your MyFTB account. That can help them in communicating with us and represent you easier. So I would definitely encourage you to look into the possibility of creating a MyFTB account if you haven't done so already. If you have a payment that you are responsible to make, there are several ways that you can do that. You can do web pay, which is free, giving us authorization to withdraw funds from your personal bank account or the business bank account on a specific day. If you would like to pay by credit card, the Franchise Tax Board is not able to process credit cards, so we have to use a third-party vendor who charges us a fee, so we have passed the fee on to you. A payment plan, there is a slight fee to set up a payment plan, but you can do this directly online. You can spread your payments over a 5-year period if you need to, and every month you can pay a small amount that's due to the state of California. We also accept checks or money orders, or we can do electronic funds withdrawals. So I just wanted to let you know that there's several options available if you do have a responsibility. If you're feel that you've been a victim of ID theft, or if we've let you know that we think you may be a victim of ID theft, here's information. You can telephone 916-845-7088 and have a conversation with one of our ID theft specialists. There are also forms that you can file directly to us if you would like to report that you feel that you're a victim of ID theft. And what this will do is we'll make sure that we are processing your tax return and not a tax return using information that somebody may have acquired from you, and we'll be able to investigate that further. So this is a good way to protect the information that you're providing to us and to be able to get your return processed timely. If you have a tax problem and we've sent you a notice, there is going to be a phone number on that notice. Call that number. At the end of that line, there's going to be people who are familiar with that notice and familiar with the information that they need and able to have a really educated conversation with you. If you have the documentation that's being requested on that notice, fax it into the fax number that's there. It will get into the hands of one of those knowledgeable people, and if they need additional information, they'll be able to reach out to you directly and facilitate that conversation. And if you're ever having difficulty communicating with an FTB employee, ask to speak to their supervisor, escalate it. You should never have to feel as if that the one person that you're talking to is the only person available. For example, on our notices for the Franchise Tax Board Audit Department, the supervisor's name and the manager's names are included on all of those letters. So I would encourage you to reach out to them. If you have a situation where you are going to be in an immediate hardship, we're going to grab money from your bank account or apply a lien because you're in a collection situation, you can call this number directly, 5910 between 9 and 4 p.m. and work with the agent, and they should be able to put a hold on your account so that you can either get into a payment plan or have time to have a conversation to help resolve what this issue is. If there is a lot of facts and circumstances that you need to communicate with us, the best way to do that is to use our online form, Unresolved Account Issues. Sometimes it's called our portal. You can find that on our advocate webpage at ftb.ca.gov. Scroll down to the bottom and there is Franchise Tax Board Advocate. You click on that and this will get you to that portal. This is a really good way for us to understand the facts and information and to be able to get this quickly into the hands of the person who is knowledgeable with the issue that you're bringing forward. And it enables us to get that assigned quickly. So those were some of the helpful hints that I wanted to share with you today. I know that there were some questions and I would like to turn it back over to you, Senator Becker.
Great. Excellent. So first question, and maybe you can just get rid of the stuff. You can stop share that we can see. Are long-term care benefits taxable in California?
The short answer is no. Long-term benefits are not taxable in California.
It's good. We like short answers. That's good. Are regular monthly Social Security payments taxed in California?
I'm happy to say no. They are not taxable in California.
Cruising along here. That's great.
Yeah.
I'm not sure if this is, is it necessary to attach the entire set of federal tax return to the California tax return? This seems to vary from state to state.
That's actually a really good question. If you're only filing a tax return that includes the Schedule A for itemized deductions or the Schedule B for interest and dividend income, then you only need to file the California return. But if you have any other schedules, a Schedule C, a Schedule D, a Schedule E, a Schedule F, how many? we go through the whole alphabet. If any of those are included in your federal return and need to be included in your California return, you'll need to attach a full copy of your federal return.
Got it. Okay. Thank you. Well, that's great. We'll move on so we can make sure we get to discussion at the end. Thank you, Brenda. Our final panelist is here, Sophia Salase. She has been a program manager with the United Way's Bay Area's Free Tax Help Coalition for 2.5 years. And she's very passionate about the United Way's mission to cut poverty, which is great. Prior to that, she's worked in several other positions in nonprofit settings, supporting families to achieve economic stability. Welcome, Sophia.
Thank you so much. Really happy to be here. I'm going to go ahead and share my screen.
Great. You have opening remarks as well, and then we have questions specifically for you afterwards. Thanks.
Great. All right. So yes, I am with United Way Bay Area's Free Tax Help Coalition. We go by a few different names. So the Volunteer Income Tax Assistance Program, VITA is the sort of national IRS name. You also might know us by Earn It, Keep It, Save It. And just, let me actually do the screen. So just an overview as far as what VITA is. So we prepare taxes for free to low to mid-income-ish families and individuals. We're able to do this program through the help of our awesome IRS certified volunteers. Our volunteers go through an extensive training and do have to get certification. So they are able to do taxes that are in scope for VITA. Generally, people who come to our sites, we are able to help them, but there are some things that are out of scope. We are all over the Bay Area, including San Mateo and Santa Clara County. And we work in city and county agencies. We work in credit unions, different nonprofits that provide basic needs, helps, community colleges, churches, really anywhere where you already have people already have a trusted relationship with the site and the individuals, and places that do good community work. So VITA services, we're able to help people who have regular W-2 income, but also people who are self-employed. There are limits to that as far as self-employment income goes, but usually the folks we help who are self-employed, might be independent contractors, usually folks who are like maybe work construction or lots of gig economy workers, definitely lots of Uber drivers, rideshare folks, people who essentially are do not have any employees, so that would be out of scope for VITA. Again, things like business losses, so if you put in more into your business expenses than you made, that would be out of scope for VITA. But if you have any questions, you could always email us and call and ask. I can put our information, I can send that information out. And also, really something to note is that we do help folks who have I-10 numbers, individual tax identification numbers. So if that is how you pay and file taxes, we're able to help you as well, not just people who have Social Security numbers. I-10s are also okay. As far as sort of like an income level, there is a general number. This is an IRS provided number of we help people who make under $58,000 a year. However, that is not a hard number. So if you make more than that and you would like to go to one of our sites, I would not let that deter you. There's all sorts of different circumstances. Folks might have, a lot of dependents or, a lot of healthcare expenses. So I wouldn't let that deter you if you're still, make 60, 70,000 or so. Really, some sites take folks who make more, but we always are going to prioritize those more lower income people, right? Okay, so we already talked about those important tax credits as far as the earned income tax credit. So I'm going to go ahead and skip over the slide, as well as the California earned income tax credit and young child tax credit. But one thing I did want to highlight about the California earned income tax credit and young child tax credit, which is unlike the federal earned income tax credit, these California tax credits can be claimed by people who have an I-10. So to claim the federal earned income tax credit, you do need a Social Security number. But for the state, we are able to help folks who have I-10 numbers. In addition to that, if you would like an I-10 number, if you don't qualify to get a Social Security number, and would like to get an I-10 number, we can also help. We have I-10 application sites throughout the Bay Area, and we're able to help you get that so you're able to claim these credits. Okay, I'll just skip over that. Recovery rebate credit, that has already been touched on, but one thing I would like to stress about this is even if you had zero income, right, and did not need to file taxes, but did not get your stimulus payments, didn't get it all or didn't get some of it, we still want to encourage those people to come into our sites because you're still owed that stimulus money, and we want to make sure we're able to help you get that, and we're able to do that at our sites. Okay, so now I'd like to talk about how our site operation models work. So we do have sort of a model for everyone. First, we have we have limited in-person services, generally by appointment. And this is essentially what our traditional VITA sites look like. This would be the most contact. So in this scenario, in this option, I should say, a taxpayer would come into one of our sites and be face-to-face with a tax preparer while the taxes are being prepared, answering any questions that might come up along the way. And then from there, once the taxes are prepared, all our tax returns are viewed by two sets of eyes. So you would go to the next tax preparer, which we call the quality reviewer, and again, be face-to-face, get your taxes quality reviewed, answer any questions that may come up, and then we would print the return, you would sign it, and then we would go ahead and e-file it for you. So the entire process is done in that one appointment. Then additionally, we have our drop-off pickup tax preparation model. And in this model, it's essentially a hybrid model. We also call it valet VITA. In this model, you would come to the site, you would fill out an initial sort of intake sheet asking you various questions, as well as drop off your tax documents. And then a tax preparer would prepare your taxes. However, it would not be face-to-face. They would call you at a later time to be able to prepare the taxes, as well as the quality reviewer. Again, it would be quality reviewed, but not with you present. Once your taxes are completed, you would come to one of our events. You would come back to the site and look over the taxes, go ahead and sign it, and we would file it for you. We also have our do-it-yourself tax preparation events. And for this model would be good for someone who, wanted to prepare their own taxes, but didn't maybe feel comfortable, or perhaps, didn't have free software you wanted to use. And here we would send you a link to our free software, and we would send you a screenshot guide in order to prepare your taxes on your own. And you could be able to prepare your taxes on your own. But if you wanted help, we had our events. So you can come to our virtual events over Zoom. And you could be paired with one of our IRS certified volunteers in a breakout room to ask any questions you might have about the tax return or about the software itself. And so that's really good if you want to learn a new skill, or just and be able to help others maybe in the future. Sometimes folks become volunteers later. It's great. And lastly, we have our completely online options, right? So there's myfreetaxes.org, and then there's also our getyourrefund.org site. And with our getyourrefund.org site, now in this case, you, the taxpayer, this would be completely virtual. You would upload your documents to our secure portal. From there, a intake worker would call you and sort of just get the basic information, make sure that we have all the documents needed, and a tax preparer would go ahead, prepare your return. Again, you would be contacted by them through the phone, as well as the second set of eyes, quality reviewer. You would be contacted by them over the phone. Finally, once your tax return is done, you would get it sent to you by email. And then you would look over it and you would be able to sign it virtually, and then we would go ahead and file for you. Excuse me. Oh, sorry. All right, I think I'm better now. So what do you need, right? So whether, if you do go to one of our sites, we're gonna need a photo ID. So if it's a married couple, we're gonna need both spouses to come in and bring in their IDs, and as well as their social security cards or I-10 forms. We're going to need a social security card for everyone on the tax return. So any kids, dependents, anyone who you're claiming, we would need their social security card as well. Could be a copy of it, but we're going to need to see that. If you're doing this process online, the way that works is you take a picture of your photo ID, social security card, and then to verify identities, it would be a selfie, right? Holding up your ID to be able to match identity. Or I mean, I suppose somebody else could take the picture of you, but nonetheless, we would need to see your face and the ID together. Then anything the IRS sends you or the state of California FTB sends you, please bring that in, right? So any W-2s, any other wage statements, if you have a 1099, because you're an independent contractor, please bring a record of your expenses, that, business deductions. So we're able to make sure that you're able to have your tax return completed completely or thoroughly, be able to write off whatever you can write off, as well as if you have information you paid out of pocket for childcare. Sometimes they send you forms, sometimes they don't send you forms, but if you did pay out of pocket for childcare and you had the information for that, please bring that in. Any healthcare forms, any information about stimulus payments or advanced child tax credit payments, please bring all of that in. And then lastly, your bank account information. If you have a bank account, I would strongly suggest doing direct deposit versus getting a paper check. If you don't have a bank account, and you go to one of our sites, we may be able to help you get a focus card so that you'd be able to get it direct deposited there. And also savings information, right? We're called Earn It, Keep It, Save It. So we want folks to get in the habit of savings. So if you were to just save even just $10 of your return, like I said, just want to get people in the habit, you could be entered into our United Way Bay Area contest to win up to $100 in gift cards. Could be, a Visa gift card, works just like cash, or to any sort of vendor that you would like, Amazon, Target, etc. If you would like, there's also a national raffle, and you would have to save $50 of your return, but there are prizes up to $1,000. So it's really, I think, worth it to be able to enter those contests. Also, very cute tote bags available as well if you save. So that's just something important to note. All right, how can you find us? You can find us by calling 211. You can also find us on our website at earnitkeepitsaveit.org. And if you're outside of the Bay Area, which, or someone outside of the Bay Area, you can always use the IRS Find a Site Locator, which has this information for all over the country as far as being able to find sites. Okay, so I'm going to stop sharing for a second, and I'm going to share, just would like to show folks our website so they can see how they can find one of our sites. Okay. All right, are you let's see, are you able to see the website right now? Okay, great. So this is earnitkeepitsaveit.org. And if you scroll down to the middle, you can see our free tax filing options, right? So we have our online tax preparation. So if you click that, it will take us to our getyourrefund.org site, and you could be able to use our services that way. Then we also have, right, our DIY taxes online. So then you can open that, and it will take you to our Eventbrite page. So we have 2 events coming up that you could sign up for. They are March 15th from 12. We have appointments from 12 to 1, 1 to 2, and 2 to 3. And then we also have another event coming up on April 5th, the same appointment times. We may add, actually, we will most likely add another date or so, just depending on how much interest we get. So that is available for you. And then lastly, if you would like to use our in-person services, we have the searchable map. So you could look, see what sites are close to you. I sort of picked a random zip code. I typed in San Mateo zip code. This is something that popped up. And then it's sort of just listed here, what they offer, what is available. And you can, right, go ahead and sorry, where did it go? Yeah, so that information is here, and you're able to see it that way. If you wanted to search by days available or languages, it's all right there for you. So I'm gonna go ahead and stop sharing and open it up to any questions.
All right, thank you. It's great to know so many resources are available and to help people with this very sometimes vexing topic. People get intimidated. So to know these resources are out there is terrific. Appreciate it. Let's see. Marcia, are payments to a non-family caregiver deductible? Payments to a non-family caregiver.
So yes, so for that question, I'm assuming that it's for either childcare or the care of someone who is disabled, not able to care for themselves in whatever way if they're over the age of 13. And yes, there are some childcare paying to a non-family, there are credits for that. So we would want that information if you came to one of our sites to see if that would be able to, you'd be able to get a credit for that.
Okay. Are there tax deductions for college fees? Unfortunately, no. No?
Yeah, well, yes. But now, as far as tax deductions for college fees, there is the American Opportunity Credit, as well as the Lifelong Learning Credit. So that is a credit available. There are certain restrictions, right, for the American Opportunity Credit. You would have, it's only for the first 4 years of post-secondary education, but there is credits available for people who meet those credit requirements. For the lifelong learning credit, that could be after, right, those 4 years of post-secondary education. However, there's some restrictions on that as well, right? But those are 2 credits that are available. So if you have any education expenses, schools send out a 1098-T, and we would want you to bring that in to be able to see if you qualify.
Great. Okay. Let's see. I think this maybe addresses something that Keith talked about. This is, will deductions for individual charitable cash donations up to $600 be continued for the 2022 cash year? I don't know if you know the answer to that.
Oh, I don't know about for like the next tax year, right? But for like this tax year, yes, bring that information in so that we can get that information on your tax return.
Right.
This year is all.
Janet asks, what should I do if I've not filed taxes for 3 years and want to file? How do I file for an economic impact payment, stimulus payment if I did not file taxes for 2020, but I'm eligible because I receive SSP?
So if you have not filed for the last 3 years and you want to file back taxes, we do have sites available that can help you file back taxes. If you didn't get your the stimulus last year, or the ones that happened the year before last year, you can still file and still get those. We can also help you do that back taxes on our online get your refund site.
Senator, unfortunately for the Golden State stimulus payments for California purposes, it had to be on a timely filed return. So the ability to be able to go back and file a return now would not qualify them for the Golden State stimulus.
Got it. Got it. Okay. Got it. But the federal one might still be available?
Yes, the federal one is.
Okay, great. If you're 19-year-old, a freshman in college, made approximately $10K last year in an internship job, should they file on their own for the first time or still with parents? So 10K or less.
Mm-hmm. So with that situation, right? So I'm assuming, right, the parent is really paying more than 51% of their expenses, thus making them their dependent, but they are getting this, $10,000 through their internship. That college student can file on their own. However, they would have to check off that they are being claimed as a dependent, and they could file that internship money. However, right, so if there is withholding, and they may be able to get some of that back. However, if, right, there was no withholding, that is below the limit, the filing requirement. So it would depend on the situation. Like, so it would depend on the situation, right? If you were gonna get money back, I would suggest filing, but if you were not going to get money back or had to, you would just, go ahead and not file because you are under the filing requirement. But that's something we could help with at one of our sites.
Great, thank you.
Mm-hmm.
This is from someone who recently started receiving but anyone can chime in here. Do we want to bring Keith back just in case there's something that he wants to weigh in on as well? We have about 10 more minutes here. I recently started receiving SSI. Prior, I received county general assistance. So I've not actually filed actual taxes in a while. I received the EITC payments. Do I need to file taxes? And how do I calculate it? We can ignore the last one part for now. Do you want me to read that again?
I think I got it, but the issue would be if you received EITC payments, that is an earned income credit, right? And so if you received an earned income credit, that means you had earned income. So you would have had some, you might get SSI or, CalWorks or whatnot, and still have some income. And if that's the case, then, and, we would, if you're below the filing requirement, if you're below the filing requirement and have some earned income, a lot of times you're going to get credits back, and those are the people we're trying to reach, right? So even if you don't have to file. So if you had some earned income, we would suggest that you come into our sites and you go ahead and file. However, if you had no earned income and you just had SSI and state county benefits, then you wouldn't be required to file. You wouldn't get anything back unless, of course, you were missing your stimulus payments. In that case, we'd go ahead and recommend that you did file.
Great. Okay. So it sounds like that's probably worth some follow-up. And that's the kind of thing that you could possibly help with, right?
Absolutely, yes.
Okay. Great. Great. Let's see, I think we discussed this again. Do I have to report the 1,400 of COVID economic impact funds received in 2021? We talked about that, right? There is a place then on the form to report that, correct?
to report that you got it, yes, you can report that you got it. However, that is not taxable. It doesn't count against you as far as increasing your income. You would report that you got it just so that in our software, we ask, how much did you get? Because if there was some underpayment, then we would want to know that to be able to get the recovery rebate credit.
And for California purposes, the Golden State Stimulus does not need to be included in income. So, and there's no letter that comes out from the state of California because we don't have any way for additional credit to be given the way the federal government does. And there was also another form of prepayment of credits that the federal government had done, and the California did not conform to that. So Golden State Stimulus is not includable in California income.
Great, thank you. Good. Well, again, we're going to bring Keith back as well in case he wants to hop in here. So we'll go with a few more questions. Let's see. These are more general ones, so it might be interesting, but you'll tell me if you can answer these or not. How would a separation at the end of 2021 affect your taxes? I guess if it was a separation happens at the end of a year. Any general thoughts on that?
Yeah, so if you did it, at the end of the year, you would still, if you didn't live with your spouse, if you lived with your spouse for over 6 months of the year, then you would still have to file. Or you could file married, file separately, but then it would be not as good as a tax return. Like it's not a good filing status. But as far as the separate, if you had separated early in the year, you only lived with each other for 2 months, then you could file without them. But yeah, I'm not sure if Keith, you want to step in and answer that question.
We'll take that answer for now. Again,
okay. Sounds good.
Thank you. Mm-hmm. Is there a place where senior homeowners can obtain professionally developed strategic tax advice when they're thinking about transferring their primary residence to offspring, taking full advantage of the generation skipping tax deference? So there's, where do you go for tax advice on that, or information on qualified primary residence trusts? Some kind of specific questions, but maybe that's a higher level tax advice that maybe someone should be paid for, but any thoughts on that?
So that's kind of out of our BIDA scope. I would going to prepare for that.
So just hire a private, that's like an accountant, just get an accountant basically.
Yeah, I would encourage someone to talk to somebody who specializes in that area to make sure that the decisions that are being made are ones that are well vetted, because there may be nuances in the law that maybe you don't want to do that or do, but it's an area where for us, our general rule is you make the decisions and then we tell you how the taxes fall out from that. But we can't really help in the decision-making process.
Right. Let's see, still got a lot of other ones. Mary wants to know about the tax advantage and detriments to owning a home and not having a mortgage. I mean, obviously there's the mortgage interest tax deduction, which is a huge incentive for home ownership. Anything else that Mary should know about? Tax advantages and detriments to owning a home and not having a mortgage.
And like you said, you can deduct the interest, but as far as that's not a question I could really answer.
Yeah. Okay.
Mm-hmm.
Brenda, I don't know if you know this. This says asked about changes, opportunities, and challenges for S corps from California rendering service contracts to other states. is that?
Yeah, that does make sense. With California, we typically have some general rules about doing business. If you're formed as an S corporation in California and you're doing business in California, providing services or sales, it's all going to be taxable to California. Now, if you're doing business with others outside of the state, then we have to start asking additional questions about whether that constitutes doing business or not. And we also have the reverse, where we have a lot of corporations that are formed outside of California, but their location of doing business is in California. So we have some really good information, just some general information on our website. If you just search for S corporations, it'll help you with the definition of doing business. And we also have a small business liaison. So if there's a specific question, and that's available on our website too, a direct email that way. But it can get complicated.
Okay. Can you guys stay on for a few more minutes longer if we run over a little bit? If you itemize deductions, can you take the amount paid in local and state taxes as a deduction anymore after SOL? If so, where is the best place to take it? If you itemize deductions, can you take the amount paid in local and state taxes as a deduction?
Well, with the change to federal law, you can still itemize, but most of us don't have sufficient itemized deductions to be in excess of the new larger exemption credits that we're allowed to have. So you're still populating all your itemized deductions, and then you're comparing those to the amount that you're allowed to take as this deduction. So it may be that you're feeling like you're not getting that deduction, but it's actually included in that larger amount that all of us are getting. But California didn't conform to that. So you still have a responsibility to itemize for California, but one of the deductions that you're not entitled to for California is the state and local tax deduction. So for federal purposes, if you have sufficient amount, and Keith, you jump on in if I'm misspeaking here, you still complete your Schedule A and do that comparison.
Yeah, and most software will have you do that. It just wants to make sure you get the larger credit. And for instance, in my case, I itemize, but my mortgage isn't big enough to exceed the standard deduction, the new standard deduction, which is, like you said, a lot larger than it used to be.
Okay. Brenda, this is a small business owner received a COVID relief grant, $15,000 from California COVID relief grants. Is this a taxable income? How about other grants given by private organizations for the purposes of assisting small businesses suffering from COVID?
Well, I'd have to look in all the other grants, but I know that the general grants that were received through the COVID relief packages are not included in California taxable income.
Okay. Yeah, that's good. And it'd be interesting on the other, because I know, San Mateo County also gave grants, and maybe private individuals gave grants to small business. I mean, there's a whole effort to help small businesses. But so to your knowledge, most of that is not taxable. So, at least certainly the California is not.
Yeah, sometimes we need to look and see how the language of the grant was crafted, because there may be nuances in that grant that could tip it into being considered taxable. Sometimes grants are for specific things, but if things aren't met, they can still keep the money. So, that could change the character of it. So we'd have to look at each grant and make sure that that what they entered into the agreement keeps it so that it would be non-taxable.
Okay. Here's one of our membership dues. So this, she's asking, she says, well, retired California Teachers Association is taxable tax deductible for state taxes, but not federal taxes. Is there a general rule one can follow to deduct membership dues? Anything on that? Maybe we'll.
Sophia, you got anything on that one? That's an area that I'm not real familiar with. I would definitely need to research that further.
I'll look into that as well for our office. It's interesting that some would be taxable for state, but not federal. So we'll look into that from our office as well. Just a couple more here. This person lives in California, sold land in Texas. Should they report those capital gains in California or Texas?
Both.
Both.
So Texas is going to want you to report it because it's property located in their state, and there may be a tax responsibility to the state of Texas. And California, if you are a resident of California, you are responsible for reporting all income regardless of the source. So even though the source is from a sale of a Texas property, since you're a California resident, you would include that in your California taxable income. Now, we do have what we call an other state tax credit. And what it's designed to do is it's designed to offset any double taxation that you may have incurred by paying taxes to one state and paying it also to California. So there's nuances in that because some states are non-taxing state, they have no state tax, but they have other kinds of taxes that may qualify. And then there's other states where they give the California, they give the deduction or credit on their state return rather than the California taxpayer getting it on their return. So you'd have to go through that. I would talk to a tax professional about that. But I definitely know that Texas is going to want to know about the sale, and California is going to want to make sure that you reported that income as a California.
Okay. Let's do one last one, given my clean energy interests here. Jeffrey, as he said, installed solar last year. In addition to the panels, he added a new electrical panel and moved it to a new location. Is this additional electrical work deductible as part of the solar tax credit?
You know, I don't know that answer. I would offhand say no, because I believe, and I'm a little rusty on this, but when they started those credits, it was just for the purchase of the actual equipment. But I could be wrong. I'd have to research that.
That would be my sense. That would be my sense as well. But I was curious to hear your opinion on it.
And California no longer has a solar energy credit being offered for state tax purposes.
Thank you. Well, what a great discussion. Thank you all. And, we'll look forward, as always. Please, if you're listening, please send us feedback as we do these. We'd like to get your feedback, and so we can better tailor these in the future. Thanks to our wonderful panelists, Keith Kirshner from the IRS, Brenda Vogt, Franchise Tax Board, Sophia Salase from the United Way Bay Area's free tax help program, which was great to learn about. Thanks also to my amazing team, Carrie Templeton, who helped really lead this here today, Saul Miranda, who also helped, and our district and capital office teams and the tech team behind the scenes today from the State Senate. Really appreciate all of you. And thanks to all who joined us today. You'll be able to find a video of today's town hall, and importantly, the resources we discussed today will be listed on my website in the events section. So the resources we talked about will be listed in the events section. And the website again is sd13.senate.ca.gov. Thank you, and see you next time.